Okay, hello everybody. Welcome back to the Mobile Mailbox Money Mastermind. I'm Alden Guajardo with Silvercrest Opportunity Fund, Mobile Mailbox Money, and Win Mobile Homes, where we provide passive investment strategy for investors that are wanting no maintenance, management, insurance, and taxes. Last week, we took two of our largest private clients to the Masters, and we're getting back into the swing of things here this week. Tremendous amount of deal flow, a lot of transactions. We had Asria last week. So, lots to talk about today. We took the number 3 from CalLand Properties to the Masters, and Patrick Franz of the Note Investor University. We actually have, I think, 1 or 2 of his students here today. So we appreciate you guys having some patience this morning, getting back into the swing of things. All of my accounts were actually logged out this morning, so I had to log back in. So we'll get underway here. We have, last month we did about 600,000 in transactions on performing seller finance notes, and there's some trickle of notes that are still available from the following month, as well as some new notes that have come available. I think we had 3 or 4 homes actually go under contract over the weekend. So a lot to talk about today. We appreciate you being here. At the end of the day, it's great to be on these meetings, but you got to get up off the couch. It's time to do a transaction. It's time to use the education that you have in your tool belt and ultimately do a transaction. We can sit here and learn and, absorb all of this information, but until you take that action step forward, it's all for nothing at the end of the day. So, know that these notes are immediately available. This is the Family Bank live deal flow market. Let's kind of get into it. We're going to just jump off the meeting here. See if I can share my screen. Great. All right. Get my screen oriented here. We've talked about lot 125, I think it is. La Montana Del Sur. What lot number is this? Give me 1 second. 129, La Montana Del Sur. This property has a underwritten, double qualified, Dodd-Frank compliant manufactured home note. This transaction, let me just pull up my notes. At 96.5, this is paying $1,200 a month for a 20-year term. So our individuals that raise private capital that are actually on this meeting today, fantastic opportunity. This is a consummated, qualified, and cash flowing position. Fully consummated, Dodd-Frank compliant. Upon request, happy to send over the full collateral file for this transaction. At 96.5, paying $1,200 a month. Where can you find cash flow like that in first lien position, top of the capital stack with quality collateral, a deserving borrower, and above average return? So even at 96.5, say you didn't want a 20-year term, I could pledge this one note in order to garnish capital investment. Let me see this calculator here. At 96.5 times my proposed interest rate divided by 12 is $804 a month. So opposed to a 20-year term, you get 19 years of liquidity for $804 a month. That's over $9,000 a year in passive cash flow. So opposed to holding a relatively illiquid asset, very nimble in that accord from a 20-year term to a 1-year term, as well as this note could be absorbed in the fund. So if you find yourself blessed enough to call yourself accredited, you could invest in the fund today and start earning interest in as little as a 30-day program on a note just like this, earning 10% return for a 1-year term, 12% for a 3-year term in an income-oriented investment strategy, investing like Warren Buffett. La Montana Del Sur, I know a couple people have been circling this transaction. It's still available. So know that, under 100,000 to find 1,200 bucks a month is virtually non-existent. Let's keep it moving here. Remember, the chat is open for any questions. Sunny had a emergency she had to run to. James, are you monitoring the chat by chance? Let's see here. Give me a sec. All right, let's keep it moving. This is lot 72 in Brentwood West. I just put an offer on this property, and ultimately it's in Brentwood West. We've done probably $1 million in transactions just in this one park. So I have it wrapped up, currently under contract. Let me just pull up my notes here. Lot 72, I think it is. Lot 72 in Brentwood West, located 3104 East Broadway Road. This retail value is $65,000. That's 75% loan to value. This is a 1-year construction loan. So retail value $65,000 times 75% is $48,750 for a 1-year term. $406 a month. So I'll raise the capital to buy this transaction. You get your first lien position. We actually bought and sold this home 3 times already. How many people getting repeat clients in manufactured housing? Probably none. So I bought and sold this home 3 times. They own this house currently. I'm buying it back from them. They put in a new AC unit and all new windows. This property, we took flooring out of my high school friend's father's house. Real wood flooring, great backyard. Flooring out of a multi-million-dollar property. This house should get us $65,000. We'll make upwards of $40,000 on this transaction in manufactured housing on a house that I've bought and sold 3 times. So at $48,750, that's $406.25 a month. Under $50,000, we're having more and more now transactions more affordable, opposed to, I even have a walkthrough video in here. That's funny. Under $50,000, most of our transactions are around 100. To find stuff like this that's a little more affordable is few and far between at the end of the day. $406.25 a month, $48,750. That's 75% loan to value. Why is this such a unique deal? Most people are not so much note investors. Maybe they're a private lender. Maybe they got money in an IRA, solo 401k, or really just personal investment, and they're looking for an annualized double-digit interest-bearing contract. This home likely will sell within the 1 year. So what does that mean? That means when you land on this property, likely within 6 months, you'll either get a call for liquidity because we've sold the house, getting your cash back, or the benefit of lending on the construction note for this property, you get a first right of refusal of the note that will inadvertently come available. And at $65,000 let me pull up my mortgage calculator. If you don't have a mortgage calculator, do yourself a service. Go download Carl's mortgage calculator. It's for free. $65K. Say they put $5K down. Unpaid balance is $60,000. At our proposed interest rate, $746.11 a month. So you walk into a higher yielding interest on the fully consummated seller finance loan. You lent $48,750, right, originally for the construction of this property to help us acquire it, right? At $48,750, You get your first right of refusal. You have the option potentially when this sells, seller finance. Most sell seller finance. So from 48,750, you come up about $12,000 to come up to the unpaid balance, and 48,750. So you went from 406.25 to 746.11, coming up 12,000 from the unpaid balance of the proposed seller finance loan from your construction loan. So that's the benefit of getting into a construction loan. For one, you get likely a call for liquidity within 6 months, but you walk into a consummated, qualified, and cash flowing seller finance note. Not all that often that we have even notes available, because in most cases, people land on the construction in the want for the seller finance note that comes available. How do you get preferred, access to these notes? Well, you land on the construction and then you exercise your first right of refusal. This 2-bed, 2-bath in Brentwood West, I think I bought originally in the very beginning for like $5,000. We put $10,000 into it. I sold it for $30,000. I bought it back for, I think, $10,000. And then I sold it to these individuals. They put in new windows, new AC unit, gussied up the backyard, great backyard living area. And I can send you these walkthroughs if you like. But super upgraded the property, and confidentially, I bought it back for $10,000. So we stand to make another $40,000-$50,000 on this transaction if all goes well. Let me just make sure my StreamYard's still sharing my screen. Here it is. Great. So that's a banger. We just continue on here. Whoops. Getting a little disoriented. Give me one moment. I'm still sharing. Okay, great. And that's lot 72 in Brentwood West. Immediately available, hot off the press. Those two notes, that's $140,000 in transactions that are immediately available. Let's keep it going. We have Brentwood West lot 30. Actually, I think we just got a contract on this house, but it is available technically. I think they're doing a cash offer, but it's not sold until it's sold at the end of the day. Lot 348 in this same park just sold for, I think it was 105 or 99,000, one of the two. This property is for sale, I think, at 75,000. Let me just look at my notes here. Yeah, about 75,000. This 2-bed, 2-bath is ground set. If you don't know Brentwood West, it's one of the nicer mobile home parks in Arizona. Grass walking areas, fountains, pickleball, 2 clubhouses, indoor pool, outdoor pool, jacuzzi, really lifestyle environment. For the end user, they're going to match or beat market rent owning this property if they finance. The people that are potentially buying this property are, I think, paying cash. But at 48,750, that's 406 a month, 406.25 a month, right? And if this buyer falls through, you'll potentially get the first right of refusal of the note that comes available. Check this out. We actually have photos of the community. So, few and far between from your grandmother's mobile home park. I think it's comical at the end of the day that people don't know that mobile home parks are actually this nice. This isn't a rundown community. These aren't dirt roads. These are multi-million-dollar properties. This community happens to be a Sun Community Park. Who knows who owns Sun Communities? It's Warren Buffett, my great-great-grandfather Warren Buffett. We follow his investment strategy, invest in his parks at the end of the day. So that's lot 30. 72's in the same park here. So we've done, like I said, probably 20 transactions in this one park. I've bought and flipped some of these houses 3-4 times at the end of the day. So industry professionals within this ecosystem in the Mesa market. Let's keep moving here. Lot 125. This is a 3-bed, 2-bath off Kyrene and Baseline, located 400 West Baseline Road in a family park. These photos are a little outdated. Looks like the move out had happened just within these photos, but it's pretty much turnkey. I think we have some final finish, walkthrough items to establish for a turnkey environment. But this property is currently for sale at $75,000. Lot 125, bear with me here. So at a $65,000 loan, that's $541 a month for 12 months, interest only. First lien, only lien. You walk into a collateralized lending opportunity and the potential of a first right of refusal on this home. This seller finance note that will come available. We'll paint the interior, to get it more turnkey, like I said. But this is, I think it's a 1990 something property. Let me just look at my sheet here. In Chaparral Village, we've done upwards of $2 million in transactions. That's Kyrene and Baseline. We have 50 homes in inventory, so I'll just have to scroll around my sheet. Just give me one moment here. It's a 1997 Cavco. Who owns Cavco? Warren Buffett. So it all comes full circle here. We've installed the mirror since, but as a 3-2 with a nice AC unit at the end of the day in a family park, right? We'll have to update the landscaping, or probably have done so since these photos. But as a 1997 3-bed, 2-bath, this buyer borrower will pay $85,000. I thought it was $75,000. It's actually $85,000. What's their monthly payment going to look like in Tempe at $85,000? My phone will work here. $5K down. That's $2,000 a month with lot rent. What's average rent in Tempe? $2,000 a month. So they match or beat market rent in ownership of a 1997 Cavco in Tempe, 3-bed, 2-bath. Average purchase price of a single family property in Tempe is probably $350,000, $400,000. So for the people average income earning Arizonan, where do they go? They're just going to continue to rent, for the foreseeable future, for the next 20, 30 years. At the end of the day, they look into these opportunities because the market and ultimately purchase prices, interest rates, it's a new day and age in housing at the end of the day. Remember that, it's long gone are the days of trailer park trash. This is the new solution for affordable housing. If every news platform in the nation is quoting a problem of affordable housing and no one's talking about manufactured housing as the solution, it's blasphemous to me. So that's 125 in Chaparral Village, immediately available. I think we have some people kind of walking this property, so know that if you do lend on this property at $65,000, you'll likely walk into a seller finance note within the next 30 days. Excuse me. Lot 9 in Meridian Mobile Home Park. Is this lot 9? Give me one second here. Just so you know, Wynn Mobile Homes is the largest dealer of manufactured housing in Arizona. And we have these homes immediately available. Lot 9, Apache Junction, Meridian Mobile Home Park, 44.9. This buyer borrower. We have another seller finance note, consummated, qualified, and cash flowing. They are closing, I think, on Tuesday at 44.9. Getting like 100 text messages, sorry. and a $3,000 down payment for a 20-year term at their proposed interest rate is $551.73 a month. Their total monthly payment is less than $1,500 a month. I forget what lot rent is in this park, but I think it's like $800, $700. So if I just update this from $1,000 on their lot rent, bear with me here. Call it $750. They're paying literally $1,320 a month. You can't find a rental for $1,320 a month. With laminate flooring, waterproof laminate, brand new cabinets, granite, tile backsplash, new appliances. We sold this a little under market value in order to get a transaction done at the end of the day. But turnkey, I mean, this is a nice house as a 2-1, I think it is. Or 2-2 here, let me just double check that. It's a 2-1. So at $1,320 a month, including the home payment, let's include insurance in this. Annual insurance, it's like $1,500 a year. Including lot rent, the home payment, annual estimated insurance and taxes, that's $1,450 a month. At less than what they would pay in rent. For a quality home, they bought the house, they own it at closing. We didn't rent the property. Remember, we're in it for the seller finance loan at the end of the day. For $1,450, that unpaid balance is $41,900, immediately available. If you have a mortgage calculator that I told you to download, you can see the reverse engineer and calculate what your annualized return on investment would be. You can't get interest rates like this in any other market. Literally. I'm telling you right now, there's no other market in the nation that you can get a return on investment like this. So if you put your nose up at manufactured housing, you need to kind of rethink what you're talking about or rethink how you think about collateral at the end of the day. Remember, it's a new day and age for housing. This is the solution to the problem. And with this home looking turnkey, you know, there's not that many people actually putting turnkey environments in manufactured housing. And that's where we have found success, you know, with such little competition in the market. We are a safe haven for a lot of these mobile home parks that take these homes back and things of that nature, or people looking to sell for a cash offer. You know, we're making hay here at the end of the day with a walk-in shower, new vanities, new toilets. This place is banging. So again, $44,900, they put $3,000 down. This unpaid balance is $41,900. For $41,900, you make $551.73 a month with no maintenance, management, insurance, taxes. You take your first lien position. What's a first lien position? That means you're literally in the safest position in real estate investment. Quite literally no other safer position than a first lien position. Remember, there's risk in investment, but how do we hedge and mitigate that risk? What do we do in order to facilitate risk mitigation in a transaction just like this? Well, this buyer-borrower went through 2 rounds of underwriting. They not only went through the community, who requires a 600 plus credit score, no past criminal, no open bankruptcies, no past evictions, and verifiable income. They also went through Dodd-Frank compliance. What is Dodd-Frank compliance? That means they were underwritten to specific criteria to make sure that they can afford to pay this loan. I had someone talk to me the other day. They're like, oh, you're flaunting the fact that your bar is 600 credit score. Are you really going to flaunt that? Yes. These people are qualified at the end of the day. I didn't just sit down at the table and write down a loan. They went through formal criteria to facilitate the loan at the end of the day. That means it's a bank quality asset, quite literally becoming the bank. So for the investor that had asked me that question with his nose up in the air, you know, if Warren Buffett will lend on a deal just like this, what makes you think you're smarter than Warren Buffett at the end of the day? We're literally in an institutional investment program, Dodd-Frank compliant, cash flowing consummated, quality collateral, deserving borrower, in one of the hottest markets in the nation. I saw a statistic the other day that Arizona is still a move to market. Yes, the market's kind of soft in every market in the nation. And it's important to position yourself to withstand what's currently going on in the financial market. And how do you do that? Well, you look at the other major operators that are positioning themselves with billions of dollars. Where are they positioning themselves? In homes just like this. They own the park, they own the financing payment, they probably have an insurance company. That's Warren Buffett at the end of the day. So Warren's actually matched my rate in some cases in order to finance these homes. So that's lot 9, Meridian Mobile Home Park. That's Meridian and Apache Trail. Currently immediately available. If you haven't, see if I have my YouTube up here. I think I passed 1,000 videos on YouTube. So this is streaming currently live on Facebook, YouTube, and LinkedIn at Mobile Mailbox Money. So let's just look at the YouTube account real quick. I have over 1,000 videos. We're currently streaming live, and these you can go back and view every mastermind that we've done over the past 6-8 months. I think it's been almost a year that we've been doing this. Whoops. So I encourage you to go back, view the content that we have. We have walkthrough videos, testimonials, negotiations, literally live negotiations through meta glasses. What else do we have? Interviews with industry experts and magnates at real estate investment conferences. I've been to every major national note investment conference in the nation. We're also the main corporate sponsor of Arizona Real Estate Investors Association. We have 18 people here on this Zoom. This is, I think, the most people we've had on our Zoom. Does anyone have any questions? I'm going to open it up. We got the chat open here. Sean Gibson is available. Sean, what's some frequently asked questions that people are asking these days? Oh, I think you're muted. It says you're unmuted, but I don't think your headphones are translating through. Getting some interaction. Appreciate your interaction today. Couple hearts going. Frequently asked questions. Let's see, what can I cook up here? What is the default and how does that come into play for someone that may buy a note, right? Like La Montana Del Sur, 129, paying $1,200 a month for 96.5. If you bought that note and you took it out of my portfolio, right? Let me just make sure I'm still streaming here. Yep. What happens at that point? Within 40 days of non-payment, 10 days after payment's not made, they get a demand letter. 10 days after that, they get a pay or quit. 10 days after that, they get a eviction notice. And 10 days after that, we get a writ. What is a writ? The writ is the sheriff comes out, locks them out of the house, and ultimately we repossess the home. Remember, this is non-real estate. These are personal property transactions at the end of the day. So 10 days, 10 days, 10 days, 10 days. It's about 40 days. We get the property back, likely 2 months in back rent or 1 month, depending on how it works out. We'll give you access to my retainer attorney. What's an eviction cost? It's about $750 in comparison to a real estate foreclosure. That's pretty cheap. So $750, 2 months of lot rent, that's about $2,000 plus a commission to a sales agent. That's about $6,000 total. And it's repossessed. Reseller finance that home out on the available market. and either mitigate loss or make additional return on investment. How many people think every mobile home depreciates? Common misconception. Since 2000, mobile homes have out-appreciated single-family properties. Did you hear that? Since year 2000, mobile homes have out-appreciated single-family properties. That's like mind-blowing to so many people because everyone thinks every mobile home depreciates. Well, I got news for you today. I have firsthand experience, okay? Firsthand experience. Listen, every home depreciates if you don't take care of it. Someone forecloses on a single family property and it's a hoarder house. Did that home depreciate? 100%. Didn't depreciate 100%, but it did depreciate, right? At the end of the day, knowing that, right, in manufactured housing and knowing the new day and age for manufactured housing, right? The new buyer, the new avatar of the buyer that's actually buying these transactions, they're taking more care of the property. This is not trailer park trash individuals. Common misconception. These are people priced out of residential real estate and are tired of paying $2,000 a month in rent. That's an entirely different avatar from previous common buyers in manufactured housing. How long can a mobile home last? Great question. Miss Tanya, I'm going to butcher this, Tanya Guerrero. Sorry about that. How long can a mobile home last? That's a great question. Well, I just bought a 1970s home that's been on the same lot with the same owner for 30 years. And now what happens, right? What do we do with that 1970s home? Will we rehab it and put it out available in the market? If it's a 2.2, likely around $50,000. So it lasted 30 years. Did it blow away? Did it get carted off the lot? You know, did a tornado come through? Listen, that was 30 years of a stable asset in its current position. No transportation, no fluctuations in volatility for that transaction. They stabilized that home in its current condition for 30 years. And now with our rehab, it's going through its second life cycle. How much longer is that home going to be there? It'll probably outlast every one of us on this Zoom. It'll be in its same lot, in its same location, probably for another 50 years. So when people ask, 20-year seller finance note, that's kind of risky. Take this into consideration. Consume this information, right? And for the people that raise capital that are actually on this meeting today, that's the verbiage you're providing to your investor, right? To provide additional understanding into the asset class. Great question, Tanya. Does anyone else have any other questions? Sean, your mic's, you have to fix your mic or something. No, not working. All good. Hi, Alden. I've emailed Sonny about my plan. I'll keep Sean's number just in case we decided. Thank you. Oh, you can hear Sean. I can't hear Sean. That's funny. Oh, you know what? Maybe my volume was down. Sean, go ahead.
Can you hear me now?
Yes, I can.
Hey!
Great.
Right. So one question I always get is, what happens if I buy a note and I pass away? What happens to that note?
Great question. Also, what happens if you want to hand that position down? What if you're retiring? What if your daughter needs $1,000 a month in cash flow? What if your wife is spending too much money at the mall and you need to get her some substitute income for her shopping or whatever? At the end of the day, you own that position, right? So if you buy that whole note, that's literally a transferable asset, right? Same thing I'm doing here today. You can do the same thing. You can sell a note, you can sell a partial, you can hypothecate that note with your Uncle Joe that's worth $50 million, or whatever. At the end of the day, we have an investor that's bought a good amount of notes, and how old is Jack, Sean?
I think he's 80.
So he's buying notes at volume, and he understands he's 80 years old. Is he going to live to 100? Hopefully so, right? At the end of the day. But if he doesn't, God forbid, he has the option within his will to make arrangements to either hand down those positions to his kids or whatever it may be, or to whoever's left, his wife. At the end of the day, he could sell those notes. I may buy them back. Listen, if it's a performing note at 14%, 15% interest, you think I want to buy that note back? Yeah, probably. If it's a seasoned, cash flowing, performing at above average return, I'll likely buy it back. If they want some liquidity at the end of the day. Sean, what's another great question you've been hearing lately?
Oh, good one, good one. So, the big question I have is this: what happens if I want to sell my note? If I have it for 4 or 5 years, how do I sell it? If I want to buy another note, but essentially, where are I going to sell it?
So, a lot of people are not note investors. There's a whole ecosystem at your availability in note investments, in lean positions, right? PaperStack is a mortgage debt broker. You can go to paperstack.com and look at notes available. You can post it on PaperStack. You could sell it to one of these investors on the meeting. I may buy it back from you. You could sell it to Uncle Joe, right? You could borrow against that note. Say you didn't want to sell it. It's a 14% note. You can borrow it, say, at 8 or 10 or even 12, depending on what that relationship looks like. Listen, what's the comparability of a bank CD or mutual fund investment within that strategy? You're giving them double the interest, 2 times the interest they're making in a comparable strategy for return on investment. So that's providing liquidity to your transaction for the people that buy the whole note. If you buy a hypothecated note for a 1-year term, you get your call for liquidity, right? Comes at a negotiated interest rate, still a double-digit return at the end of the day, but opposed to a 20-year term, you get 19 years of liquidity at the end of the day. So every year, we sit on the phone, say, hey, congratulations, Sean, you've been earning your monthly distribution. Would you like to auto rollover because the note's performing, or would you like a call for liquidity? And how do I provide liquidity to that transaction? Well, I bring those notes on this platform to mobilemailboxmoney.com, or I absorb it in the fund, or I borrow against with another investor, or I sell it to a hedge fund, an IRA investor, solo 401k, or really just someone with personal funds looking for a smashing passive return at the end of the day. Had to mute.
That's not me. That's not me at all.
Kicked him out. Perfect. So, we're definitely gaining traction, to say the least. That just goes to show the amount of people that are viewing this stuff. There's thousands of people watching these Zooms, these masterminds. And why is that so impactful? Well, we're giving away quite literally free education. I'm teaching you, giving you the keys to the vehicle here today, right? You can go spend $50,000 with the Note Expo with Eddie Speed and get a formal education. They'll give you documents, check boxes, obviously much more formal of a education processes. But we button these up for a bow of investment for you to be able to understand the benchmarks that we put these notes out, right? And every note hits our benchmarks. It's important to understand that. So by the time it gets to this platform and it's a qualified, cash flowing, and consummated seller finance note, you know what you're getting at the end of the day. And upon request, we'll send you the full collateral file, which comes, Sean, what's in the collateral file?
Collateral file for our investors, everything. So we've got before and after photos, which I love. Of course, we've got our loan application, we've got our W-2 for our clients, our credit score first, family reports. We've got a full files like you're going to, just like you're buying your home from Wells Fargo or Chase. You've got a full collateral file with all the documents, all the information on the client.
So you're not just getting one piece of paper, right?
Not at all. I'm getting a full file.
So the full file comes with contracts, sales contracts, promissory note. We set up every loan with automatic funds transfer services. That means it's contract servicing. That puts a wall up between the borrower and the lender. Do you really want to talk to the borrower? You really don't. That's why we set up contract servicing. They take account of amortization schedules. The buyer borrower can call AFTS, make a payment, tell them how bad their day was. We don't want to hear that. We just want the payment at the end of the day. So photos, sales contract, promissory note, automatic funds transfer services, their underwriting documents, their seller finance application for the loan, and the underwriting file with W-2s, their verified income, and their ability to repay. Why is ability to repay so important, Sean?
I'm sorry, repeat that first. I'm sorry about that.
Yeah, why is ability to repay so important?
It's a huge focus for us. Obviously, you have to pay up on time. That way, the note is secure, and of course, the investor becomes confident they're getting their payments on time. But pay your bills on time.
Yeah, so an ability to repay is a third-party individual that stamped off on that transaction that said they can afford this loan. They went through criteria, they hit specific benchmarks, and they actually stamp off on that mortgage or the seller finance loan and installment contract on these manufactured homes to show that they can afford the payment. That is so key critical. Why is that so key critical? Well, opposed to me, the investor who's originating this loan, opposed to you just taking my word for it, we went through third party, right? In order to add further grade to this investment. If you packaged 100 of these loans in a special purpose vehicle and sold bonds out of that SPV, you would get that portfolio graded. And I'm actually looking at doing that once I build my portfolio up with Silvercrest Opportunity Fund. We have 27 positions currently performing. That's $19,000 a month in passive cash flow. When I build that, say to even 50 loans, likely what I'll do is I'll form another SPV. I'll issue corporate bonds and get that graded to go to insurance companies. That's a $50 million conversation right there, okay? I can borrow from insurance companies. I can borrow from banks. I can borrow from other hedge funds. I can borrow from wealth management firms. This is really where the rubber meets the road and how true financial freedom is achieved. Because if I can stack $50,000 to $100,000 assets making, 14-15% return, and my return on investment is that much higher than adjacent real estate investment strategies, and I go borrow against those loans or issue corporate bonds at 6 to 8%, I'm literally making 6% on my money with none of my own capital. That is truly freeing. That's what the definition of financial freedom, right? How do you orchestrate a transaction with none of your own money and ultimately still make a margin, right? That's life-changing opportunity at the end of the day. So we went through probably $500,000 in transactions right there. I could put $50,000 to $1 million and have you start earning interest in as little as 30 days with Silvercrest Opportunity Fund. And how do we deploy capital in the fund? Well, if I haven't been as direct, happy to do so. We take your capital as you invest in the fund, accredited 506C Reg D through a private placement memorandum and a deal disclosure for your specific tranche. I take investment, I buy the loan. Easy as that. And where do I acquire these loans? From my other business, Win Mobile Homes. Win Mobile Homes, licensed mortgage officer, 7 in sales, 5 in management, 15 in rehab, institutionally recognized from CalAm Properties, Equity Lifestyle Solutions, Kingsley Management, Roots Management, Treehouse Group, and the list goes on at the end of the day. Sean, what are we currently seeing as a trend in the Valley in manufactured housing? I'm going to shoot a random question off.
Sure. Give me more example about trend, because you guys, we're the biggest dealer in Maricopa County, so we set the trend. So tell me more about what trends you're looking for, because you set the market trend.
So family parks are becoming much more attractive in manufactured housing. So over the past year to 2 years, we've gained influence with CalAm Properties that's owned by Ivan Carno. Ivan Carno is the actual attorney for I think it's Scientology. Am I correct on that? Yes. So if you look up his name, he owns CalAm Properties. It's kind of masked in that accord. But CalAm Properties has like 100 mobile home parks around the nation. And here in the Valley, they own like 20. And a lot of those are family parks. So through that relationship, we've scaled into more family communities, which is a blessing in itself, because, starting in 55 and older communities, is a limited buyer borrower. There's only so many people that hit that age restriction at the end of the day, and new families are being priced out of single family. So we've pivoted. We still have 55 and older homes, but we've pivoted into family communities. Right now, I think we have probably 15 in family parks, or 10 to 15 mobile homes in Mesa, Tempe, Phoenix, Glendale, Apache Junction. People love that Tempe market. People love the Mesa market. Glendale as a sub market. We're testing the waters in that area. But to know that that's the wider availability of a buyer borrower, 55 and older still has its merit. You got a retired individual on guaranteed income. They're making Social Security, a pension, they're making disability or whatever it may be. That's guaranteed income. Where in, the adjacents in family parks, you got probably 2 borrowers. The husband and the wife are both working. They probably have a kid. The kid's probably working. So both stable environments, but to know the dynamics between the two is really kind of eye-opening at the end of the day.
I can add to that too, Alden. So I know some of our parks allow rentals, but I'm seeing a huge demand on the west side. We've got a lot of our manufactured homes in Glendale, in Phoenix. I'm seeing probably 15 to 20 people will contact me regarding mobile homes rentals as well.
So I'm going to bring up here our rentals that we have in Long Haven. So I took a big bet. I bought 12 of these brand new. I think we've rented 2 of them. So we got 10 left. And I have 2 or 3 positions that are available on these homes. So say you wanted to buy a rental, kind of left field. We're here for notes, but for the people that want some, depreciation capability in their portfolio, some tax incentive, some, not just a income generating note, or maybe they do want a note. These are available. These are able to be rented, and they're brand new, 2-bed, 1-bath at $40,000. It's $333.33 a month. Call it the 333 deal of the day. This is Glendale. Sean, do you know the cross streets?
Yes, it's going to be 57th Avenue in Camelback, about a mile and a half from the Brewers Training Center. Milwaukee Brewers Training Center, yeah.
So really know that it's not a short-term rental component. This is annualized rentals for 55 and older individuals. They could be as low as 45, right, Sean?
42, yes. 42, actually.
42, yeah. So that's even more availability. Brand new homes. Sean, what does a brand new home like this actually cost to put on the lot?
Oh, my gosh. I mean, just to buy the unit, you're thinking upwards of $90,000 at least. Just the unit alone, of course. You're going to transport it there, set it all up. So, it could be upwards of $115,000, I would assume.
So this home, I think, is more around like 60 off the lot, like 50 or 60, but you still have 20,000 in transport and setup, AC units, awnings. So they likely had $85,000, $75,000, $85,000, $90,000 into this unit. How much did we buy these homes for? I bought them for $25,000, bought 10 or 12 of them for $25,000. That's $300,000 that we spent on these transactions at 25% of value, right? Why did we get such a great deal on these? What's wrong with the houses? There's really nothing wrong. We just happened to come in at the right place at the right time. And I think it was the end of the year last year, and negotiated 6 months of free lot rent. We're coming due on that free lot rent. But negotiated a crazy deal. I beg to argue. I think we get the best deals in the nation. Beg to argue at the end of the day. And also, on top of that, I think we're the largest operator in the nation. Beg to argue that as well. Because most institutions that talk to us, Callahan Properties, Kingsley Management, ELS, they all say the same thing. We don't have anybody else operating like you guys, and we own mobile home parks around the nation. So this is truly a generational, once in a lifetime opportunity. And the fact that I'm even giving this stuff away for free, providing you access to these notes, is groundbreaking. There's nobody else in the nation that is putting this stuff out for public availability for free. So remember, go and view our YouTube. Today is brought to you by SilvercrestOpportunityFund.com. That's our Reg D 506C accredited investor fund. See if my screen will work here. There we go. Where we pay 10 to 14% interest returns to accredited investors. Say you're non-accredited or you raise capital. These notes are available at mobilemailboxmoney.com. Please add me on Facebook. I've actually got looks like my podcast got rescheduled. Anyway, I post a stupid amount of stuff on Facebook, from walkthrough videos, from AI generated videos, to us at the Masters. Shout out to Patrick Franz. I don't know anyone else on the Masters website other than us, but that's a banger. Please add me on Facebook, YouTube, Instagram, LinkedIn, TikTok. Getting some interaction. Appreciate your interaction, Archie. It's all fun and games to join these meetings and ultimately get access to this inventory. But if you don't take a step forward and take a calculated risk, you're going to be where you're at the end of the day. It is a risk. Remember, you have to take a risk. There is no reward without a risk. It's plain and simple at the end of the day. So knowing the category specific items that an individual facilitates to get financing, knowing our track record. We've done 400 doors in the Arizona market. That's $30 million in manufactured home sales and private capital that we've raised in manufactured housing. I don't know too many people, to be frank, that have built up a system like we've built, and it's garnishing a tremendous amount of attention, to say the least. We got random people joining, trying to bust up the meeting. That happens here and there at the end of the day. But that just goes to show the literal impact that we're having on a weekly basis, every week, every month, and every year. We've grown year over year. In 2020, we did our first $1 million in business. That was our first million in a year. This year, we did $600,000 in transactions last month. That was our biggest month, and we're likely going to get close to that again this month, hopefully so. But that was 9 transactions last month. Last year, we did $3.4 million in manufactured home sales, and 99% of those were seller finance, who we went through a licensed mortgage officer, third-party underwriting, in order to make sure that we were compliant at the end of the day. Does anyone else have any last comments, concerns? There's literally 19 people on this Zoom today. I'm just so happy. Getting some thumbs up. Appreciate your interaction. Any last questions? Put them in the chat. You got your free reign here. I think we got some hedge funds on here today. Group Funding Inc., GA Realtor Funding, a couple other people raising capital. Let's see, who else have we talked to recently? I think Angela Hudson we've talked to, Rodney Madison, prolific capital raiser. At the end of the day, this is truly what it's all about. At the end of the day, it takes a team, right? It takes a team to conquer big things and solve a problem. And, we're happy to have y'all included. I'm going to put my number here in the chat. So that's my personal cell phone number. Don't text me, please call me. Don't email me, please call me. At the end of the day, I do business on the phone. I want to talk to you at the end of the day. Someone hearted that. Thanks so much. I do this all for you guys, to be frank. Yes, we're here to do transactions, but life in business is about the relationship. I'm not here to just sell you a note. You got that Joe Schmo across the nation trying to chef you a note that's not online at all. No presence, no branding. Yes, it was probably done correctly, but they're just trying to do a transaction. I'm here for the long-term relationship. Why is that? Getting a whole bunch of interaction. Thank you so much. Because people do business with the people they know, like, and trust, and to establish that for long-term, mutually beneficial business is the difference between an unsuccessful business or a one-off transaction to truly becoming an institution. You guys here today we're building an institution that will rival Warren Buffett's investments. I'm saying that here today. I'm telling you, we will match Warren Buffett's strategy in the Arizona market. That's a big thing to say. I want to do 100 homes a year. And how does that take place? 100 homes a year at 50,000, probably 50 to 100,000. That's $5 to $10 million a year. Little old me, I can only raise so much money at the end of the day. So that's where you come in. Arbitrage your relationships. Use your IRA for tax-deferred or tax-free investment strategy, or solo 401k, or go to your Uncle Joe. Listen, the likelihood of them finding return on investment in any other adjacent real estate investment strategy is probably close to none. Can you just go buy a single family home and rent it out for cash flow? You can't. Really, that's an appreciation play. Well, most people say over the next 5 years, there may be little to no appreciation. So where do they go? Into the stock market. right? And in the stock market, highly volatile. What's going on? We're at war right now, and every tweet Trump puts out is a huge dip at the end of the day. You know, it all comes back, but you know, you could lose your hair. You know, you may be 50, 60, 70 years old, and you're tired of losing $500,000 in the stock market every other week. You know, that's truly exhausting at the end of the day. Well, the people that you talk to on a regular basis, your family, a friend, or really just another real estate investor, they're looking for these opportunities. I'm telling you right now, you will have success. And how do you leverage that relationship? Well, you either form a fund like AH Group Funding or GA Realtor Funding. I'm not sure if you are a fund, but you know, good example. Or you hypothecate that position. What does that mean? That means, let me just explain that. It's a collateralized lending opportunity. Hey, Uncle Joe, would you like 8% in a first lien performing asset? Here's the collateral file. Contracts, promissory note. It's cash flowing, consummated, and qualified in a Warren Buffett investment strategy. Would you take 8% monthly? I'll pay you 8% monthly, or maybe even 10, you know, depending on your relationship at the end of the day. And candidly, I'll give you that document. I will let you use a hypothecation document out of our program, an attorney reviewed document at the end of the day, to leverage your relationships. This is the kind of stuff that I'm putting into your pocket. I'm literally shoving money in your pocket right now, just to let you know. And every note that I sell is a note that I don't have access to in my portfolio. So, you know, yes, I'm selling a transaction, but, you know, we do 5 to 7 transactions a month at the end of the day. And that takes, you know, to sell notes, to borrow against, to absorb them in the fund, you know, true deal flow. And that's why we have these meetings, to bring them on, show you due diligence, give you access to the chat so you can quite literally ask the expert in the room any question that you want at the end of the day. Does anyone have any final questions, comments, concerns? A couple people liked my phone number. Again, please don't email me, call me. I do business on the phone. Well, that's it today, people. Appreciate you being here today. Today's brought to you by Silvercrest Opportunity Fund. That's one step closer to financial freedom. What do we call that? Mobile mailbox money. Silvercrest is the official sponsor of Arizona Real Estate Investors Association. We own the industry category and Business Network International, and the largest referral networking marketing group in the West Coast, I think. We have 90 members. I did $3 million with Business Network International specifically. I've raised $7 million from Arizona Real Estate Investors Association. Proofs in the pudding. Appreciate you guys being here today. Y'all have a great one. That's what we do with Win Mobile Homes, Mobile Mailbox Money, and Silvercrest Opportunity Fund. We got someone viewing here live. Appreciate you viewing here today. Appreciate your interaction. You know, it takes a team to conquer big things. Thanks so much for viewing. Till next time.